All right, welcome to today's show. So, I'm going to zoom out a little bit and look at Strategy's playbook and what they're actually doing since we're all very interested in the stock. And I'm going to talk about yesterday, I talked about what's happening with tariffs and what's happening with inflation. And we obviously know April 2nd, we have the trade wars that are happening between the United States and other countries. So if you want to watch that video, go back and watch it from yesterday. But today's zooming out to look at strategy and to look at what we're really dealing with during turbulent times and to look at the actual company of strategy and what their actual game plan is. And I think this is very, very, very exciting because it actually gets us to take a look at this company's future and how rock solid strategy is. So without further ado, we're going to jump in here. I want to make sure you can hear me in the chat box. Just put in the chat box if you can hear me coming through live, because we had a little mute issues the other day. Okay. So if you're in the chat box, put in the comments, you can hear me. We're going to get rolling here. So this is not financial advice, not tax advice, not legal advice, but let's talk about the boldest Bitcoin bet in history from Strategy. And I'm going to give you a visual breakdown of their Bitcoin playbook, which we obviously know many companies are adopting. And exactly what's happening with Strategy and other companies who are adopting the playbook. Okay. So let's dive in here. All right. So number one, the bold move obviously is that Strategy now owns 528,185 Bitcoin. The value of the company is approximately $35 billion. So we know that they've changed their entire company as a software company originally to focus solely on Bitcoin. And that is their entire game plan. And it's fascinating to see what they're actually doing because their average Bitcoin price now is $67,458 per Bitcoin. Now, we know recently, yesterday, they recently made a big buy. And the buy was for 22,000 Bitcoin. And they did that through their Strike and their Strife offerings, which are their preferred stock offerings. So when they do that, it does not dilute the shares within the company in the short term. And these are new products that are geared more towards institutions. And they just made a big buy of 22,000 Bitcoin for $1.9 billion. So even during the market dips, I think it's important to pay attention to what we've just witnessed here, which is a company that is literally leading the way despite market uncertainty. And I have to believe that their big buy today of 1.9 billion was really like, hey, despite what's going on with the tariffs, despite what's going on with the Fed's uncertainty, despite what's going on with the fact that inflation has gone up, they're literally just doubling down, and they continue to double down, and they continue to stick with their strategy, no pun intended, to actually buy more Bitcoin. And they continue to do it, and they do it, and they do it, and they do it, even in times where, like, we're looking at this week. And if you saw my report yesterday, $82,000 for Bitcoin is a base layer that we really need to hold right now in the short term. And if we go below the 82,000 mark, like we did temporarily last night, eventually we could drop below 80,000, and that's going to bring in a bearish sentiment. And, you take a leader like Saylor, and he comes in and he throws down, $1.9 billion to buy more Bitcoin in the face of this tariff kind of headwind we're running into, and he still continues to freaking buy. So you just got to admire the certainty, you got to admire the confidence, and you got to admire their sticking to their playbook, which is huge. So really, this is a great breakdown to understand what they're actually doing. And if you don't understand how their playbook works, this breaks it down in a very, very, very simple way. Okay. So they obviously have three ways that they're acquiring Bitcoin. Number one, they issue more shares. So that's when they're tapping the ATM, so to speak, at the market. And that temporarily dilutes the shares, right? So that's one way that they do it. They didn't do that today. They did it through preferred stock today, not through common stock. But let's look at just the conversion options on the convertible bonds. And I think it's really important to take a look at this particular strategy that they're using to acquire Bitcoin. And this is really what it is. So when they're issuing convertible bonds, if you've never understood this, pay attention. You're going to like this. So investors are paying now, basically loaning them money now for the right to buy shares in the future. So it's like selling a lottery ticket. You know, they sell tickets to the lottery, so to speak. And strategy, they get paid up front. So it's a large institution comes in, they're like, we're going to loan you $1 billion. And strategy goes, great. And they take the $1 billion and strategy gets paid up front. And strategy takes that $1 billion and they buy Bitcoin. And so the company that's loaning them the money isn't getting anything up front. And in most cases, when strategy is deploying these convertible bonds, they're not paying any interest on them. And so if you really look at the absurdity of goodness this is for us that own the stock, strategy collects $1 billion, for example, up front, and they don't have to actually they don't pay any interest on it. They're not paying anything to the company that's loaning them money, nothing. And they get the $1 billion, they buy Bitcoin, and then when you see in point number 2 here where it says 30% to 300% premiums, follow me on this. Like if strategy stock was $100, this is just an example. We obviously know right now it's at 288 or 289. But if the stock was at $100, the stock price of premium of a strategy, when they sell it for a premium, meaning when they're doing the deal with the people that are loaning them the money through these convertible bonds, when you hear the word premium, like the other company is paying a premium for these bonds, basically what that means is they have an option to convert into the stock later on at a 30% premium above the current stock price. So if the current stock price was $100, the company that loans strategy money has an option to convert that into stock at a 30% premium. So when the stock goes from $100 to $130, then and only then they have the right to convert it into stock. Now, in some of these cases, strategies loaning out money, and in some cases, people have the option to convert it at 100% premium. So in today's example, let's say the stock's trading at $300. When they sell it at 100% premium, then the company has a right to convert that stock at a $600 price point. So when you hear this thrown around, it means that companies are literally loaning money to strategy. Strategy's buying Bitcoin, and the company that loaned the money has the option to convert into stock at a price way above what the stock price is right now. That's huge, man. I mean, that's huge. Okay? Like unbelievably huge. And I know this is basics of what they've been doing for a while, but very few people understand this. They're raising money and there's such a minimal amount of risk for strategy. Such a minimal amount of risk. It's like, I'm going to do a deal with you. I'm going to give you a whole bunch of money. You don't have to pay me any interest right now. Pay me nothing. I'm going to take the money you give me. I'm going to go buy Bitcoin. And when my stock goes up in the future, you can convert at that stock price in the future, but I'm going to tell you what the price is that you can convert at. Like crazy, right? Would you like most people would never do that deal in a million years. Never, right? Like, come on, I'll say it one more time. Like I pretend I'm strategy. I'm like, okay, you loan me $1 billion. Okay, I'm going to take your $1 billion. I'm not going to pay you any interest, none. I'm going to take your $1 billion. I'm going to buy Bitcoin. You're going to wait until the stock, not its current price right now, you're going to wait for the current stock price to go up double. And then at that point, I'm going to allow you to convert into my stock. Like, that is a sick deal, guys. Sick. Like, unbelievable. Okay? So it's incredible, like, what they're just doing. And that's just one methodology of strategy buying Bitcoin. Today's buy or yesterday's buy was not done through convertible bonds. It was done through preferred stock, which is a totally separate offering from what I'm talking about. But this just shows you what we're actually dealing with. What's up, John? What's up there, War Room? What's up, Dan? We got the whole crew here. What's up, James? So this is like incredible what they're actually doing. If you just step back and look at what this company's doing, it's phenomenal. Okay. Now, the other thing to explain, okay, because I know when we're in a situation right now where we're in turbulent times, and somebody put in the comment box the other day, they're like, hey, I was talking to some of my friends and they're ready to sell out a strategy. And they're like, I'm not, because I understand it. And I really, and this is not financial advice, but I really do get the point of view of, like, when one understands what's happening and how solid this freaking stock is and how much of the future this stock is, it will be one of the most valuable companies on planet Earth in the future. It will. And so the other thing to talk about with strategy is Bitcoin yield explained, because if you heard Saylor earlier in the year, he was talking about how they're going to measure strategy and they're really going to look at their Bitcoin yield. And really all that is, this is the definition of it right here. How much Bitcoin per share the company holds. That's Bitcoin yield. Simple. Look at it. How much Bitcoin per share the company holds. And in 2024, the yield, there was a 74.3% yield. So this is an important point, and this is super, super, super important to get, because we know when they issue common shares, meaning like they issue more paper, and when they issue paper and we buy the stock, and that's what most of us are doing, not financial advice, but that's what most of us are doing. They issue shares and we buy the stock. And you hear all the time people going, oh my God, he's issuing more shares. He's diluting the stock. He's diluting the stock. He's diluting the stock. But this is such a key component right here that I just literally skipped over. Right here, four lines down, it says, despite share dilution, every share gains more Bitcoin. Okay, so in 2024, there was a 74.3% increase in the yield. So despite the share dilution, despite when people get afraid, we're issuing more shares, they're diluting more shares. Yeah, they're diluting more shares temporarily, but despite share dilution, every share gained more Bitcoin. That means your shares that you own gain more Bitcoin. My shares that I own gain more Bitcoin. It's really worth going back and finding one of James's videos from Invest Answers, where he maps out the increase of the Bitcoin that you hold per share, and how if you continue to hold strategy over time, you will get more Bitcoin per share. And that is one of Strategy's and Saylor's primary goals, is to get you more Bitcoin per share. And so even when they're issuing common stock, it is getting us more Bitcoin per share, even though temporarily it's diluting the shares. So the pizza metaphor here is it's more slices. Like, we have a pie of pizza and we're making more pizza. There's more slices, but everybody still gets more. And that's the reverse of how things typically work. It's particularly if you look at the US economy, when we issue more pizza slices, or when we issue more money and we print more money, everybody gets poorer, right? So when we print more money, people get poorer in terms of the dollar value that they hold, the purchasing power. But in strategy, when strategy issues more shares or issues more pizza, metaphorically, we all get richer. It's the reverse, complete reverse, right? That's why, we hold Bitcoin, right? When we hold, those of us who hold Bitcoin, we know that, like, as there's more money printing in the economy, those of us who hold Bitcoin, we're in a good position, because Bitcoin is going to continue to go up and the dollar gets devalued. All right. So very, very, very important components that I'm talking about as it relates to Bitcoin yield with strategy. Now, just the basic financial engineering masterclass to sum up what they're doing. Strategy uses at the market, which is basically issuing common shares, like I was just talking about. So the three ways they do it, to just break it down, I mean, this is If one just understands how they're filling their war chest, this is the 3 ways. And if one understands how rock solid every single one of these strategies is that they're actually employing or deploying, this company is so freaking rock solid. It's unbelievable. So number one, they issue the shares, they issue the common stock, and we buy the stock and they buy Bitcoin. The second one is convertible bonds, which gives somebody an option to convert that into stock in the future. So the example I gave prior, I'm Strategy, you loan me $1 billion. I take your $1 billion, I buy Bitcoin. I pay you 0 interest in the meantime. And then because you gave me $1 billion, you can convert it into stock at some price in the future. That's what convertible bonds are, an option to convert into stock in the future. And then you have preferred stock that was just used today to buy Bitcoin, or I think it was used Sunday to actually buy it. And so now you have preferred stock like Strike and Strife. And the difference between those two is with Strike, Strike pays a lower interest rate. So they actually do pay a dividend, which is paid at about 8% with Strike. And the difference is with Strike, they can convert some of that into stock in the future. And why people buy Strike and Strife is they want fixed income. That's why. So people who would normally buy bonds like institutions, they now have an opportunity to buy Strike and Strife, which gives a fixed income payout, because people who buy bonds want fixed income. But rather than getting a 4% or a 5% from bonds and getting that kind of fixed income, when you buy Strike, you get a fixed income of about 8%. And then you can convert some of that into common stock in the future. All right. But to me, it's not a better deal for me. I'm not going to go out and buy Strike because I want to own the common shares because I want the volatility. And when they convert into stock in the future, they're going to get nowhere near the upside that we're going to get being common shareholders. They just have less risk in the interim. Okay. And then Strife is different, where Strife, you can't convert into stock in the future. With Strife, they get a higher payout, which is about a 10 to 12% payout. All right. So that's how the preferred stock works. So if you look at how we just actually bought more Bitcoin, and I love we can say we, because if you own stock, that's we. So the way we bought more Bitcoin, the company of Strategy, was through preferred stock offerings of $1.9 billion, which is amazing. Now, if you break it down, and you've heard that you might have heard in headlines or something like this that Strategy is over leveraged, or they're going to face uncertainty and problems in the future. And if you just look at the data, it's just not true. Okay. And the reality is, when you look at their debt, they have $8.2 billion worth of debt. And so the interest costs that they have on most of this debt, they're paying 0% interest, but on some of the debt, they're paying out interest. And so the interest cost is about 0.42%. So you're looking about $34 million in interest per year based on their convertible debt. Okay, the convertible debt that they have. And then if you look at the preferred stock, which we were just talking about, that's going to pay out dividends, they're going to have to pay $143 million per year. So overall, they have to pay out about $170 million per year. But you have a company right now that's valued at about $80 billion. Okay, so I don't think that their interest payment and their debt payment that they got to pay out, I should say their dividend payment and their debt payment that they got to pay out, I don't think it's going to be a big deal for Strategy. Make sense? So this is pretty interesting, right? Interesting stuff, man. So Strategy versus Bitcoin. I get this question a lot. Why would I buy Strategy versus Bitcoin? And the simple explanation is this. It's not financial advice, but here's why I do it. Strategy stock moves 2 to 4x more than Bitcoin. So back in 2024, if you take a look at Strategy stock, there were times where it was moving at a 4x to Bitcoin. And so we understand this by the what's called the MNAV premium. And if you want to know what MNAV premium means, M stands for market, NAV stands for net asset value. So the NAV, the net asset value, like Bitcoin is their actual asset that they hold on their balance sheet. So it's the net Bitcoin that they hold on their balance sheet. So after the debt that they have. So they borrowed money to buy Bitcoin. So you take the Bitcoin that they have, you minus out the debt, and you get the net asset value. And the market is just M. So the market is willing to pay a premium. So MNAV premium. The market is willing to pay a premium to Strategy's net asset value of their Bitcoin. Make sense? So basically, in very, very simple terms, the reason why Strategy trades at 2x or can do 3x or 4x, or does that in terms of returns to Bitcoin, is because the marketplace is willing to pay a premium to own the stock. Very simple. So you and I, we pay a premium to own the stock. When people loan Strategy money, they're paying a premium to eventually convert that stock in the future. So the entire marketplace is paying a premium to the value of their Bitcoin holdings that they hold on their balance sheet. And that's why Strategy is worth so much. So if you look at an example here, if Bitcoin goes up 10%, Strategy could go up 20%. So you've seen this before. Bitcoin goes up 10%, Strategy can move at 20%. But they don't always move in tandem. So this is not a written rule. We've seen times where Bitcoin moves, moves a little and Strategy moves a lot, right? So they don't move in tandem, but this is kind of a general rule of thumb. And there's times where Bitcoin moves 10% and Strategy moves 30%. Okay, and that all depends on what's called the MNAV premium. If the MNAV premium is 2, then it's more likely when Bitcoin moves at 10%, Strategy is going to move at 20%. If the MNAV premium is 3, which you saw in 2024, meaning people are paying a 3x premium for Strategy, then when Bitcoin moves at 10%, Strategy will move at 30%. This is not a hard rule. This is a general rule for how you can look at how things moved over a longer period of time. So if you go back in 2024 and you look at the rate of return in terms of what Bitcoin did in 2024, it was 120%. What Strategy did in 2024 was 359%. So Strategy moved at about a 3x to Bitcoin in 2024. So this is not something you're looking at in the short term to see how is it moving on a day-to-day basis, because you can easily come in and prove this theory wrong and go like, well, that's not true because I look at it today and that's not how it's moving. This is how you look at it over the long term. You can expect the Strategy is going to move at a 2x to Bitcoin on average, is basically what I've seen. And sometimes it will move more. All right. So with Strategy, you get more gain, you get more risk, but the volatility is power. And the volatility is why I'm in the stock. Now, with that comes the risk of when this baby goes down hard, right? And so that's something always to consider as I'm looking into the future of when I will take profits with Strategy. I'm always looking at times of when I will take profits, because at some point Strategy is going to go up and at some point we're going to see a big correction down. Make sense? And we've already seen corrections, but it could be a bigger correction than we're seeing right now. It could be a crash down. So don't forget that. All right. Now, you've probably heard about this. This is breaking it down very simple. The U.S. Bitcoin bond proposal. We know that the U.S. is looking for budget neutral strategies to buy Bitcoin. This could be one of them. Okay. And so Bitcoin bonds. All right. So it's $2 trillion in treasury bonds, but they have a twist on this. And so typically with bonds, like the U.S. will go out and be like, hey, loan me some money. And the U.S. takes your money and they pay you an interest rate for it. All right. So that's basically how it works. And the U.S. has been employing this strategy for a long time. Okay. Loan me money. I'm the U.S. government. You can trust me and I will pay you back interest on that money. We all know that, it's backed by as good as the trust you have in the faith of the U.S. government. And with the fact that the U.S. government is $36 trillion in debt, they got to do something. So this Bitcoin bond proposal, I think, is brilliant. And what happens is they can take 10% of the funds and buy Bitcoin. So if the U.S. is going to go out and issue $2 trillion worth of bonds, meaning, hey, I want to collect $2 trillion and I'm going to pay out interest on that, 10% of the $2 trillion, which would be $200 billion, is then going to be used to buy Bitcoin. Pretty cool. So 90% is used to fund traditional government debt. And then the other 10% is used to buy Bitcoin. And the plus side of this is you get tax-free interest when you do it. The interest rate they pay out is going to be lower than their normal 4 or 5%. It would be 1%, be tax-free though. But the upside is that it's linked to Bitcoin. And so there's a higher upside potential of something like this, right? So these are things that the U.S. these are proposals that are actively out there right now for the U.S. to take a look at doing this and issuing Bitcoin bonds, which would be huge. So we know there's many intelligent ways for the U.S. to actually fund the strategic Bitcoin reserve. And this is a good sign, right? Trump family and crypto. Here's what happened today, or here's what's been happening recently. You heard an article came out today. The Trump family launches American Bitcoin Corporation with Hut 8. Hut 8 is a mining company. So the way that I read it is that Hut 8 will own 80% of it, and then the Trump family will own 20% of this. And so it's a mining company. And Donald Trump Jr. says buying is half the story. Mining is the big play. So the Trump family is going to become a mining company now, right? But like the positive thing about this that I think is amazing is the fact that like we know we have a president who's crypto friendly, and we got his entire family that's getting into crypto. Okay, so like if you look at the long-term indicators, this is a really good sign. It's not just like, hey, we're doing for this U.S. government. It's the families doubling down on this crap, man. Okay. And it's not just happening where the Trump family is getting into to mining. The Trump family's also they're getting together in this corporation to do stable coins. So they're going to issue a stable coin. Is this like insane, man? They're actually going to issue a stable coin. So I'm going to give you some tips on what a stable coin is, because I broke this down into very simple components, because I think it's very important to know what stable coins are. And here's some bullet points on what a stable coin is and what the benefit of it is. Number one, it's fast money. Okay. This is why it's good. You can send money instantly, which basically means that 24/7, there's no waiting for banks, and there's no weekends on this. And we know the problem today with, 5 days a week and then 2 days on the weekend, you can't do crap. It's cheap to use. So it's way less to send money across the world. It's like pennies or even for free. It's always worth $1. So it doesn't go up and down like Bitcoin does. It's safe and it's actually stable. It's good for people without banks. There's people in this world and in this country that don't have banks. So people who don't have bank accounts, they can still use stable coins with just a phone. Amazing, right? Like completely digital age. You don't need a bank account. You can use stable coins. It's smart for business. Stores, apps, online companies can get paid faster without big fees. Okay. And then let's talk about why it's good for the economy. Money moves way faster. So we know speed is power. And so the faster that money moves, the better for the economy is. It helps businesses grow. I mean, you even look at the situation right now where money's circulating slowly in the economy because we have high interest rates. So there's not a lot of money available. So when you have slow circulation of money, it's slower growth for companies. This is speed. Speed wins in the end. Less fees and middlemen, which saves everybody money. So it's making the entire money system quicker, smarter, and cheaper. It is a good thing. So the fact that the Trump family's involved in this is, heck, man, that's good. Whatever your political viewpoint is, I think if you would be very happy to know if you own Bitcoin or you own Strategy and you have a president and a administration that is supporting crypto and supporting Bitcoin and just signed an executive order for the strategic Bitcoin reserve, and the family is going all in on Bitcoin and crypto, I think it's a really good indicator. What do you think? Just a guess. Not the brightest guy on planet Earth here, but just a guess. This could be, right? What do you think in the comment box? Tell me. War Room, what do you think? What do you think, TCC? Huh? So I think it's pretty interesting, okay? So that's interesting. War Room says, think about this. There are more Tesla vehicles on the road than the total of investors holding Bitcoin. Interesting. I didn't know that data point. Okay, so $500 trillion dream. This is kind of like the Sailor dream. If you watch my video from yesterday, I talk about what Sailor's going to do with his keys. He's going to burn his keys when he dies, and he's going to give it back to the Bitcoin network, making everybody richer. His prediction is that Bitcoin could be a $500 trillion market cap. And if you read one of his articles from the other day, I did it, I think, on the Saturday night. I did a live, and I went through one of his articles, and he basically says that Bitcoin is going to demonetize gold, then it's going to demonetize real estate, and it's going to eat up the money on planet Earth, and there's going to be $500 trillion in the network. And one day, the price per Bitcoin could be $23 million. Now, we know his prediction in 2045. His prediction is a $13 million Bitcoin. In a bear scenario, $3 million, but $13 million Bitcoin. So Strategy could be one of the most valuable companies on planet Earth. That is what you hold right now if you hold this stock. And to say that we are early, oh my God, we are so early. We're so early. Everybody on planet Earth should know what I'm just talking about here today of what this company's actually doing. It's insanely cool, okay? Now, here's the risk factors, and some of these I'm going to debunk. I pulled some of these up in articles today. Bitcoin crashes, Strategy crashes harder. That is true. So nothing to debunk there. Tax liabilities on unrealized gains. Let's wait till the new FASB accounting comes out. Let's wait till all that comes out. I'm not going to comment on this right now. Share dilution, that is true, but it's not a risk factor. Okay? It's not a risk factor. So the publishing where you have articles out there that talk about they're diluting shares, that is not a risk factor. It's a freaking benefit. So it's the opposite of that. Regulatory risks, sure, but every company has regulatory risks. Any stock company has regulatory risks. And the fact that we have a pro crypto and Bitcoin administration, the whole point of what they're doing now is to regulate these industries. So I don't see that as a negative point. I see it as a plus point. The fact that regulation is coming in and it's going to be more highly regulated, which is a good thing. And the quantum computing threats, there was videos out on this a month and a half ago. I think it's literally just FOMO. I mean, if we have an issue with quantum computing threats, then we got a much bigger issue because all the networks would get hacked and everybody would crash. So people are saying, hey, the Bitcoin network would get taken down by quantum computing threats. All the networks would get taken down. So we have a bigger problem if we have quantum computing threats. So 4 out of 5 of these are bunk, and one of them is true, which is Bitcoin crashes, Strategy could crash hard. Those are the risk factors to me, okay? That's one risk factor is that I'm looking at as a main thing is like, yes, if Bitcoin starts going down, Strategy can go down hard, okay? And let's look at the bank model versus Strategy model. And let's not forget that Chris is in there, goes, yeah, don't like Trump, but love Bitcoin. Hey, we're all here because we love Bitcoin and we love Strategy. That's the one thing we all have in common. Whatever's going on with the presidency, whatever your personal points of view are, we love the fact that we have a pro crypto administration. That's beautiful, okay? Now, this point just sums it up into like, if somebody's watching this and isn't convinced now the Strategy is absolutely and ridiculously brilliant, and that and if you're not convinced that they don't have the model of the 21st century, then this will sum it up, because this just trumps the original bank models, okay? Bank model versus the Strategy model. Traditional banks take deposits and they buy bonds. And then they pay low interest rates to depositors. Strategy raises funds via, it's what we've been talking about this whole presentation, issuing common stock. They issue shares, they buy more Bitcoin, and everybody wins. This whole myth about diluting shares being bad, yes, in the short term, does it rock the markets and dilute the shares a little bit? Yes, but we get more Bitcoin per share. So they raise funds and they buy Bitcoin. And one of the ways is through issuing common stock. Number 2, they now have preferred stock with Strife and Strike to raise more money to buy Bitcoin. And that's great for institutional investors. And number 3, these convertible notes, also great for whales and institutional investors. Convertible bonds is a third way. And they buy Bitcoin. And the amazing thing is that they pay little or no interest until Bitcoin moonshots. So on their convertible bonds in particular, not on their preferred stock, right? Preferred stock, they're paying out dividends. But on their convertible bonds, when they're taking money in, unlike a bank, but when they're taking money in on their convertible bonds, they're paying out no interest in most cases until Bitcoin moonshots. That's the beauty of what they're doing. So this is a brilliant, brilliant, brilliant model that we're seeing in the marketplace. Let me know your thoughts and comments down below, and what you think about what's going on. But I thought this was a very, very important video to just zoom out and say, what is this company actually doing? It's more than a company. It's a freaking movement. America is adopting the Bitcoin reserve model. The Trump family's involved. And Saylor's vision is literally influencing institutions, governments, and investors worldwide. And even in the face of the tariffs that are coming April 2nd, I don't know what's going to happen, but even in the face of that, Saylor continues to throw down. And he's continuing to put stability there when we're in a market that's completely not stable right now. And I'm not avoiding the fact that the market is unstable. My entire video yesterday was all about the instability. But I'm bringing this in very intentionally because when you have tons of uncertainty in the marketplace, you need stability. We all need it. You can only take so many fear headlines. You can only take so many doubt headlines. You can only take so many the world's crashing tomorrow headlines. You can only take so many, oh my God, the tariff wars are going to destroy us. You can only take so much until you zoom out and you figure out, what do you believe? You figure out, what do you believe? And the belief is based on some stable idea that you have. And if you understand this stable idea of what strategy's doing, of what I've laid out through this entire presentation, and you realize how rock solid it is, if you understand the stable idea that we have a pro-crypto administration, the Trump family is literally going all out, buying mining companies, creating ETFs, literally creating ETFs, yes, issuing stable coins, like they are going all out with crypto. The administration's going all out. Saylor's going all out. So in times of uncertainty, one needs to put stability there based on what they believe is going to happen. If somebody goes, my belief is I can't take the risk and the volatility, then great. This obviously is not for them. But if one goes, hey, I believe in the future, I believe that Bitcoin is sound, I believe that Bitcoin is what it is, and we don't have to repeat what it is, and I believe what Saylor's doing, and I watch him continue to take consistent action along the same line, doing what he says he can do and not wavering. And if you have a leader like that who is continuing to put it there, and he's creating stability for governments, he's creating stability for countries, because he's leading the way in the movement, and he is the one leading the way. Make no mistake. He is. So check out what they're doing and stay tuned. But it's going to be one hell of a year. And could we get the crap kicked out of us on April 2nd? It's totally possible. Could we have more fear tomorrow and more drops? It's totally possible. But I'm zooming out and doing this for you just as much as it is for me, to focus on the stable foundation of this company called Strategy, formulated by a vision that a man had in 2020 to say, I will not sit on a fiat melting iceberg any longer and watch my entire life work of my company sit in reserves where we are printing money day in and day out, and I cannot watch my iceberg melt away. And he decided to do something about it. There you go. And as a result of a decision by one man, and many, many people around the world like us who have bought Bitcoin and done things and made decisions, group agreement creates the stability. And that's what creates it. Group agreement creates the future. And it's either going to be group agreement in fear and doubt and uncertainty, or it's going to be group agreement onto what this thing actually is. And we know it's volatile, that's true, but what is it actually? And that's what today was about. So I hope it serves you, and I'll see you on the other side, my friends, okay? Put any comments down below. If you want to share this with a friend, I think it would be very, very good for a friend to see this video so they can understand what strategy is. Okay. I'll see you soon. Have an amazing day.